All right, Michael. Good morning. Welcome back to Pre-Market Prep.
Good morning. How's it going, everybody?
Good. So I'm sure you guys are busy right now. You know, with a lot of your clients and whatnot, trading Nvidia's earnings.
Yeah.
What's new with you since the last time we had you on the show?
I mean, a lot is going on. Obviously, the market is crazy. And today I came to talk about the market. Last time, we talked about trade pool, of course, but always keen into talk about trading because that's what we do every day. And for me, it's still excited from the first day. You always like to trade, even if you become the CEO of a prop firm, you still want to trade and get rid of all the meetings.
It's an addiction, Michael. Like I'm addicted to trading too. Like some people are addicted to alcohol or smoking. I'm addicted to trading. I have the same addiction. I don't know if I could stop.
I don't want to stop. That's the idea.
I don't want to stop.
Right?
So you're watching the NVIDIA report there last night. You see the action. NVIDIA is still trading down here, but you see the S&P futures, trading down. Everything's down last night. We wake up this morning and everything is reversed and everything is green. How do you approach the market here today after this overnight rally?
Yeah, so I got to share my screen if it's possible.
Yeah, let's share it.
And let's
get Michael sharing it here.
Here we go. So I actually took those shorts. As you know, the Trader Pool is part of the Fivers, our parent company, and I took those shorts on the Nasdaq. We had a few of those right here, and 2 days ago I started to short it and covered it at the bottom. It's actually went down a little bit more, so I covered here, and it went down just a little bit more. But now, as you mentioned, Dennis, before, the rally is pretty strong, right? You can easily see that the bounce that we had here, like the pullbacks, were much weaker. Those 2 or 3 was much weaker than the one that we're getting right now. So it is look pretty strong. Obviously, we have this major resistance level at the 19,500 on NASDAQ. So I'm looking to buy the dip whenever it drop a little bit, and of course, if it will break through the 19,500.
What's the time frame on that chart?
This is a 1H, an hourly.
An hourly. Oh, good, good. Okay, good.
And I would love to see a buy the dip on those levels at around 19,000. So if we will drop, if we want continue to move up above the 19,500 at around 19, I would definitely look for a buy the dip. And of course, I'm a short-term trader for like my average hold is 8 hours. So that's what I'm looking for on NASDAQ. Of course,
so you got the buy the dip hat on here right now. So you're looking for weakness to add to stocks. And are there specific stocks that you trade, or do you trade mostly, the ETFs, or do you jumping into some specific stocks as well?
Yeah, definitely. So, of course, because I don't have a lot of time these days, so I will focus on the NASDAQ or the Qs. But whenever I get the chance, I will focus on the one that, popping on the news. So you already spoke about Dollar General. And, of course, Best Buy is also looking pretty sharp.
Yeah,
Not a lot of volume, but still a huge gap at the opening, so that will be interesting to try to trade today. And Affirm is also, I'm not sure if you talked about it, but AFRM. Did you cover that?
We have not.
No, we haven't today. We haven't. And Affirm's had a hell of an earnings report here, and it's trading up 23% here right now. It's on our list. We haven't got to it yet here. SMCI took over for a while. Michael, what are your thoughts on Affirm?
So we're at 39 right now. So the main goal for me is to mark the major levels at around the area we're about to open. So let's say if it's 9:30 right now, if it will be, if we're at 9:30, then 39, you can easily see the pop that we had a few months ago. So that will be a rejection level in most cases. And that goes all the way back to the beginning of the year, right? All the area between 39 to 40. And we have this gap to cover. And if we'll do that at around 41.50, that could be easily a place for me to short it intraday. And of course, the next level will be the 42. We have a huge gap from February 24. So I'm looking to short it, to be honest. After this crazy move to the upside, There are plenty resistant levels at around 39 to 42, and that will be those short areas that I would look for.
Will you go in at one chunk, or will you parcel into it? To get the momentum, or are you one of these all in or all out?
No, I'm definitely scaling into my positions. This is by far the best rule that I stick to. You place an order, you fill the water, understand if it's good. Once you see that it's forming and you get in more confirmation, then adding more to the position. I don't see a reason why not to do specifically that. It works amazingly, and definitely for the guys that listen in and just started to trade, try to do that instead of risking it all.
So Michael, I mean, we're stock guys here, and most of our crowd are they trade stocks primarily, some other stuff too. But can you talk about why Trade the Pool is a good, prop trading firm for people that want to trade stocks as opposed to people that might be looking for more Forex or stuff like that?
Yeah, I mean, first of all, trading stocks is much funner than trading Forex, right? We have the news.
I think so too.
For sure.
I mean, you buy all the companies that you trade, right? You have your iPhone, you have your Nikes. It's make more sense. You understand the companies behind the scene, I guess. But besides that, I see a huge advantage that we only have 6.5 hours to trade without the pre and post market. Because when you're trading Forex or even futures, from time to time, I get traders that tell me that they woke up at 2 a.m., opened the laptop, and looked for a trade, right? So now here we have those 6.5 hours. This is the time that I'm focusing on, and this is the time that I'm looking for those opportunities. So I see a huge advantage in this one. And besides that, we have 12,000 symbols to trade. So as traders, we're looking for opportunities, right? And we've got tons of that in the market, where with Forex, you only got like 28 pairs. 8 of them are really moving. So definitely stock trading is, for me at least, much more makes sense.
Do you usually stick with the tech stocks? Is that where you're looking the most, Michael, or do you go outside tech, or you're looking at where the action is?
I mean, these days I would definitely stay with the tech and also the NASDAQ and the Qs, but take me back 5 years or even 10 years, I would jump in and out everything that moves.
And then Mike, for people that are interested in joining Trade the Pool, can you talk about, I guess, kind of just like the first steps that someone would take, the evaluation process, what that's like, and say I wanted to go do it today, what would I do?
Yeah, sure. So first of all, you go to our website, you choose the tier that you want to trade with. We have $20,000, 80, 160K, and 260. That's our max buying power. Once you choose that, you pay for the evaluation, one-time fee, and you go into the trading mode. You start to trade on a simulator account. You have 45 days to pass the evaluation. Once you reach the target that we set and you stick within the risk parameters, then you move forward to the funded phase. On the funded phase, you literally, every dollar that you make, we split the profit and you take it home. Every 14 days, you can ask to withdraw your profits. So it's pretty straightforward. Of course, you need to stay within the risk parameters. This is something a bit different that the guys that will join will see from trading your own capital. On one side, on your broker account, you don't have any rules. That could be a disadvantage or advantage, depends how you look at it. But when you trade in-house, when you trade in our capital, first, you have enough capital to trade with. There is no PDT rule. Second, you're not risking your own money, so you don't care about losing it on a good side, on a good way, because your emotions are detached. And third, we do have those risk parameters to keep you in line and not blowing up your account.
What else are we looking at on your screen here? Yeah, I know the upper right one is the daily. I believe probably the volume right below that, and then what is that? MACD? Is that what you got below that? And discuss the other chart there. What you're looking at for your analysis?
Yeah. So on my chart, I will stay as naked as possible, also at home, but also on the chart. So basically. So what I would look for is, in most cases, is reversal, so counter trend, either buy the dip or selling the top. That's 99% of my trades. And I will use a few things. First of all, the volume, of course, to find those capitulation moments when, there are bull or bear traps, to show you that there is a breakout, but it's not really real. The volume will increase dramatically. And then buyers will go in while sellers can drop their shares. So that could easily be something that we would look for on a firm, for example, today. Look for major resistance, let's say the 39 that we said, and then there will be a high volume coming in. A lot of buyers will say, this is it, it's going to 50. They will click on the buy, and once they do that, on the other side, short sellers will drop their shares or get into a position. And the second thing that I would look for is also, I really love that it's been around with me since day one, this divergence in the MACD. So for example, you see a drop, a new low coming in right here, and then you can easily see the MACD creating a higher low. Once we have that, including the volume, including the major support level, that will be a key for me to go in, scaling into the position, starting with a small chunk out of the full dollar amount of risk that I'm willing to take on a trade, and then continue to ride the trend or the reversal.
Last question from me, having a run in office and, being with traders and, observing their, positions and stuff. I mean, what do you do? Like, if people like risk parameters for you as a firm, like looking at, like, what if people just start buying NVIDIA today? Just start buying it. Is the overall firm, I mean, is it regulated to each person? Because I can remember looking at some traders' positions and things going on, and I'm just like, oh my God, this is just going to be an absolute disaster. I mean, it's from how do you handle that from a risk management standpoint?
Yeah, definitely. That's probably on our side, that's the most important and also the most difficult part to do. We have obviously the department guys that sit in every day and just watching the numbers, each trade, each account, each trader, each position, of course. And they really understand, and like you said, in real time, they need to understand what they do with it. We are using some AI solutions as well to help us monitor it, because there are like literally millions of orders every month. So in that case, it's not an easy task, but we are doing a few things. We have profiles. So for example, if you trade in penny stocks and you trade in 10,000 shares a trade and you go in all in, we put you in a profile level of risk or aggressive. And then we have the second profile will be, for example, tech companies trading 100 shares, taking a smaller risk. Then we put you on that profile. Once we have that, we can adjust the risk literally in real time for each group, basically. But it's not an easy task, I got to tell you.
All right, well, Michael, we love learning more about Trade the Pool and having you on the show. Always some great information. We do have the link in the description here for people that want to check it out. I will throw it in the chat as well. We also have the QR code on the screen that you can scan. Michael, I know it's a little bit of a different time for you, halfway across the world, but I appreciate you coming on Pre-Market Prep. We'll let you get on with your day, and we'll catch up soon.
Thanks so much, guys. Good luck.